Hello everyone, a very good morning, good afternoon and good evening to all of you. This is your host Vaibhav. In our today's session of JForex Indicators Explained, we will be considering a pattern named as double top formation, double top pattern. This is a formation which is used as a bearish reversal pattern. We look for the trend change using this formation. So whenever if the underlying trend has been bullish and now it seems that there is a reversal coming in on these higher levels around the same levels, around two similar levels. The price reverses, and if in that scenario we see the confirmation forming of a trend reversal, we can look to initiate the trades and profit from this kind of a bearish reversal. So we can initiate the short sale trade. So let us now head to the JForex 4, the newly released trading platform from the Dukascopy Bank SA. This is the chart for the NZD USD with the each candle period defined at 5 minutes. Let us increase its time frame so we can better judge the situation. This is the NZD USD now with the each candle period defined at hourly time frame. For finding this pattern, all you have to do is a quick search. If you simply type in double top, double top pattern, it will be added on the chart. Let us see when that pattern has formed on the chart in recent history. And it is apparently it hasn't really formed in recent times, it seems. Let me check once again if it was correctly added on this platform or not. Charting. There is some lag. If we try once again. Okay, yep. Oh, it has been added already. So there was this one instance in which we saw these double top forming. So around these levels of 0.6275, there was reversal with these two highs forming around the same levels, and then the price dipped, and we saw this break on the lower side. So in this kind of scenario, you would have been in a position to short sale while keeping the stop loss with a little buffer on the higher side. So if you had initiated the trade on these levels, you would have gotten these ride all downhill around 1 percentage point move materialized from these higher levels toward these lower levels. So that would have been a significant amount of gain for this bearish reversal. Let us look for some other examples as well. And here this is formation with involving which is involving lot of time because it formed on this large time frame with these couple of sessions involved. And here also similar kind of price reverse price level was observed for these two tops, and then this break on the lower side, which went on to create this possibility. If you had initiated the short sale while keeping the stop loss with buffer slightly above these immediate swing highs, you would have made quite a good amount of money as the price remained in the downtrend for next couple of sessions. So this would have been quite a remarkable profit making opportunity. Let us look for some other examples. So this is a bearish reversal, and whenever you see that the price is reverting from around the same levels twice, it means that there is a selling pressure. And if there was earlier uptrend, that uptrend might be coming to an end. So there are two possibilities generated. The profit booking is likely to happen. So those who had gone long in the earlier uptrend are likely to book profit, as there are signs emerging that the current trend might be coming to an end. So those who were in profit are likely to exit. And if the stagnation happens in the price and it continues to remain around the same price level for a decent amount of time, then the new market participants are also likely to get more convinced, if they were not earlier, of the new trend emerging, the reversal happening from earlier uptrend to a downtrend. So the new market participants will also jump in and try to gain from these changing dynamics. So in that kind of scenario, again, you can profit, and the stop loss is not going to be much. Of course, if it involves a large time frame, then the stop loss is going to be wider. So all you will have to do is reduce your lot size as you are dealing on the larger time frame. The pips are going to increase, the percentage point moves are going to increase. So you will have to adjust your lot size accordingly so that you can make risk reward ratio favorable. It shouldn't be the case that if unfortunately the trade ends in loss, you should not be losing too much of money. So for that, whenever you see the pip value both on the target size as well as on the lot size increasing because of the increased time frame, it is better to reduce the lot size and trade live while keeping the risk reward ratio totally in our favor. So if you happen to get the trade right, you should be making money. And if you happen to get the trade wrong in that scenario, you shouldn't be losing too much of money. So here we have seen a couple of instances of this double top formation where the reversal is happening around the same price levels, and then this break on the lower side. Here also for next couple of sessions, the price remained in the downtrend after this reversal, but it didn't really go much further on the lower side. So if you simply look at this chart and do a back of the envelope calculation, you will see that the risk reward ratio would have been around 1 to 1, not that great, but still you would have been able to make money if you had gone with a trailing stop loss setup. And not all the time the trades are going to go in your favor, and not all the time you are going to get excellent risk reward ratio. In this case here, after this reversal, the price didn't really go much further. It remained in this consolidation phase with this narrow range, and in course of time it again reversed on the higher side. So it would have been a good idea to go for profit booking when things were not really going anywhere, things were stagnating on these levels. So if you had booked your profit, though it might have been very small, still you would have been able to end the day on a profitable note. So that would have been a net gain, nevertheless. So these are quite logically sound as well as quite reliable formation, and as the price reverses from around the similar levels, you get the logical as well as market participants conviction that this is the price where you are likely to see a possible reversal from earlier bullish trend to a bearish trend, and this might be the time to get involved and try to get ready for the reversal for a for the underlying instrument, and you can then try to ride this newly developing trend as long as it lost. And if you see the price stagnating, not really going anywhere, then it is time to book profit. And if you see that there is a significant decline, and you can simply trail these profits. So both these kind of scenarios can be exploited for our advantage in this market dynamic. You can utilize even lower time frame formation to look for the possible double top formations. Now in this case here, earlier in the day we had this double top formation and then the price remained in this bearish inclination for next couple of hours. This was not going to offer you that great risk reward ratio here, as things stabilized and it simply went into a consolidation phase. The price didn't really go much further. It would have offered you something like 1 is to 1 risk reward ratio, and if you had not gone for the proper booking in time, it would have even reversed the course and go on to make a fresh swing high. So you will always have to keep the time frame in mind, on which time frame you are dealing and how to get involved in the market with that price dynamics. So if you are in good amount of money, it is better to make an exit. And if you are losing money, even in that scenario, you have to always stick with the stop loss and exit from the market if things don't go your way, so that you would be in a position to have the risk reward ratio in a favorable term. And whenever you make money, you should be making good amount of money. When things don't go your way, then the losses should be minimum at the least. Here also we saw this double top reversal on this lower time frame chart. So for intraday, for the swing trades, for the long term investing, for all these time frames and all your trading styles, this formation can be utilized independently, as well as if you have any existing setup in your mind, in your system. If there is a sound trading system, even in that you can incorporate these double top formation, double top pattern to optimize these mechanisms to go for the opportunities where you see that the probability is high, probability is in your favor. So those kind of instances you can profit from. So that's all from my side while explaining these patterns, logic, and concept. And also we saw some of the uses and how we can utilize it for the profit making opportunities. Since these price action formation, we can't really do anything with its input parameters. The input parameters are going to be taken independently from this chart. So all you can do is vary the time frame. There is nothing much we can do beyond that. There is nothing we can do to edit its output either. So all these parameters are mostly fixed. These pricing pattern, pricing formation. So whenever things shape up like a double top, it will be recognized on the chart and you will be in a position to profit from that. So that's all from my side. And guys, for next session, you can even suggest new indicators if you feel that there is some indicator which needs to be explained, or if you even want to modify some indicators and see how things are likely to turn with these modification in your mind, you can write to me in feedback and we can jointly discuss these developments and also figure out the ways to modify the indicators and work around with these systems. So that's all from my side for today's trading session. If any of you have any query or any idea to share, write to me the feedback and I will be more than happy to take the discussion forward. This is the Friday. Thank God it's Friday. Now it's time to wrap up the session, wrap up the day, wrap up the week, and get ready for the weekend. See you next time around on Monday. Till then, goodbye.